Okay, now I'm about to share this simple but powerful strategy with you. It's so simple that anybody at all can easily learn it. All I need from you right now is to pay close attention to everything I'm about to share with you and go back and practice it. This is actually almost my fourth year in this FOREX game, and I believe at least I can share something very valuable with you. This is UCFX. Welcome back to my channel. This channel is all about helping forex traders get acquainted with the necessary information and knowledge on how to become profitable in the forex market. So if this is you interested in contents like this, do well to subscribe to this channel and turn on the bell notification icon to actually get notified anytime we upload new videos. And don't forget to drop in the comment section any topics that you would like us to make videos on. I'll do my best to do those videos concerning the topics. So without further ado, let's get started. Believe me, I've tried a lot of strategies you could think of for months and nothing actually happened. But ever since I started learning this particular strategy, everything actually changed. There was this super clarity I got about things and how they have happened, that I've never gotten before. So stick with me while I share this with you. Ever heard about the small money concept? Yeah, I know what might be going through your mind right now. But believe me, you got to try this. I mean, that's what you're looking for, the best strategy, right? So what's this strategy all about? It majorly focuses on making you understand where the forex big players, that's the big banks and big institutions, are generating liquidity so that you can actually avoid being liquidated and actually make money trading alongside with them. This strategy would open your eyes to where to when to trade, wait or possibly stay totally out of the market. There might be some terms you will be hearing in this video that you might not understand, such as liquidity, what liquidity is, BOS, that's break of structure, and the rest of them. So please check out my channel. I've made videos concerning most of them, if not all. So let's get started.
So step number one is directional bias. So you need to understand what direction price is going to take. How do you do this? You need to go to the higher time frames, that is the daily, weekly, and the monthly charts. You need to build a story from the information the higher time frames gives you. So let's assume you've read the daily and you understood that the weekly, the monthly, daily charts are showing bullish trend. So let's assume we have a bullish trend. Let's assume we have a bullish trend. So after understanding this, knowing the trend of the market, this leads us to the next step, which is order blocks. So yeah, you need to mark out your order blocks from it, especially the higher time frames, because order blocks on higher time frames are more effective. So after marking that out, you need to go over. Then we go over to the next step. So, but here in this sketch that I have, let's assume we have our order block right here. Let's assume there is another block inside this area. So then we go over to the next step, which is break of structure. So the third step, break of structure. Just like we have here, after marking out your order block, you need to make sure that there is a break of structure after the formation of that order block. So looking at this sketch, we had the break of structure here. So we had the break of structure. We mark it out as actually we call it a BOS. So that's your BOS. Then this is actually your OB. Order block. So that's your OB. So you need to see a break of structure, just like I said, after marking out your order block. Then you wait for price to come back to this order block after this break of structure. So then this leads us to the next step, which is liquidity. So liquidity is basically the way institutional traders induce less informed traders on taking wrong positions. Yeah. So when the institution wants to sell, they induce less informed traders to buy and thereby taking them out. So before price returns to your order block, this order block, you need to spot liquidity. So it comes in the form of equal highs, equal lows, and trend lines. So after, before we go over to the next step, let me actually explain this. So let's assume price did something like this. So let's assume price did something like this. Price comes into this area, drops into this area, goes back up. You will agree with me that most traders would be going long when they see price come back into this area. Because most breakout traders will think that, oh, this is actually a breakout to buy inside this area. So what price will actually do is go up a little bit, come back down. So here inside this area, smart money will be waiting for traders that will be going long to take them out. So price will touch this area for the last time, then it will finally take it out. So this is what we actually call liquidity. So here in this area, we have liquidity in form of equal lows. So liquidity was actually grabbed because less informed trader thought that, oh, market is actually going to, move up from this this area after breaking this structure, but not knowing that this area is actually liquidity used by the smart money traders. So we then go over to the next step. So here we have our liquidity in form of equal lows. So if it's actually a bearish order block, to come in form of equal highs, but here we have equal lows. So let's move to the next step. So the next step is discount levels. So yeah, you need to sell or buy at discount levels because that's where smart money sell or buy from. So this applies as well in real life. We enjoy buying things in discount prices. So you need to make sure price is at discount levels. And we have our discount levels as 0.18 and 0.786 of the Fibonacci tool. So let me show you that. So about anything below or anything, and 0.5 is actually equilibrium. And then anything below 0.5 is called premium price. So you will take your Fibonacci tool, drag it from this place, from your order block to these highs. So you need to make sure that price is at discount level before you start taking your entries. So here we have a 0.618 and 0.786. So you need to allow price to get into this area before you start taking your entries. So after that, we then go over to the last but not the least. So the last but not the least is actually lower time frame confirmation and entries. So lower time frame confirmation and entries. So after price must have taken out liquidity and is spotted price at discount level. So this is where you actually need to get interested in buying or selling. So you will wait to see price tap into this area, the point of interest. So after tapping into this area, you need to spot a lower time frame order block formation. So let's assume we had this order block on our 4-hour charts. So we need to spot formation of order block as well inside this area on 15 minutes time frame. So and you would mark out the order block, the 15 minutes time frame order block. So you would as well wait for break of structure, just like we saw here. Wait for break of structure, wait for liquidity in form of equal lows, and a tap into the order block. So we're just basically repeating what we actually mapped out on the higher time frame. So just like I normally say on this channel, the market is actually fractal. So you wait for the exact same thing that you saw or you marked out on a higher time frame. to happen as well on your lower time frame. But if you're using the H4 time frame, your entry should be on 15 minutes time frame. So using the H1, your entry should be on 5 minutes and 1 minute time frame. Then on the daily, your lower time frame confirmation chart should be on H4 and H1. So here let's assume we are using H4 order block. So you need to as well wait for price to tap into this area, form another order block in your 15 minutes time frame, wait for that same lower time frame break of structure, just like we have here. Wait for another liquidity formation, grab and tap into a discount level and order block formed in that 15 minute time frame. So let me actually show you that here. So let's assume we zoom into our 15 minute time frame. So you need to see price do something like this. Tap into this discount price. So you need to wait for a formation of order block, so which is actually identified with a break of structure. So with that, you wait for price to tap in into this area, break this lower time frame structure, then come back, give you equal lows, just like liquidity, just like you saw here, just like liquidity. So you as well wait for that liquidity to be grabbed, and you as well wait for price to come back into discount levels with regards to the formation of this order block inside this place. So price would actually tap into that same order block and discount levels. Then this is where you would actually be taking your entries from to go long and continue the bullish trend. So I'll be explaining this on the real charts so that you can actually understand more of what I've been saying. So here we are on the real chart. This is AUD SED. So this is the monthly charts. Just like I said, you have to view the story from the monthly charts down to the lower time frames. Here we are on the monthly time frame, and as you can see, you had a break of structure right here. So and we are actually in a downtrend, actually in a bearish trend. So after price broke structure, you could spot an order block inside this area for the monthly time frame. So just like I said, you have to know where price is coming from and where price is about to go to. So right here we had a break of structure, and price is likely going back to mitigate this monthly order block. So here on the weekly we are turning bullish already. We had a break of structure right here. So weekly and daily is showing a bullish trend, but the overall trend of from the monthly is bearish, because you're about to go into this discount level to mitigate this order block. So let's scale down to having this information, let's scale down to the weekly and daily chart. So here on the weekly, we had a break of structure. We had a break of structure right here. So weekly is turning bullish. Weekly and daily are turning bullish to go and mitigate this order block in the nearest future. So let's scale down to the daily chart. So here on the daily chart, we are bullish as well on the daily chart. So what do we need to do here? We need to find our order block. So here we are looking for bullish order blocks. Okay, so let's spot our order blocks. Before price broke this structure, you would agree with me that we had an order block inside this area. So we had another block inside this area. So as you can see, we had a last bullish candle but we are supposed to mark out the last bearish candle before this upward movement. So in case you see stocks like this, you see a bullish candle before and a positive move, you have to go down to the H4 time frame to refine this other block, because there is an other block inside this area. You have to go down to the lower time frames to refine this other block. Yes, so let's go down to the lower time frame to refine this other block, because we have another block here which took out this high. So let's go down to the lower time frame. So here we are on the 4-hour chart. So here is this area. So we have to refine the other block using our H4 time frame. So here on the 4-hour time frame, we had this last bearish candle before this impulsive move. See? So on the daily chart, it wasn't that clear. So in times you see you open your chart and the other blocks are not clear, you have to go down to the lower time frames to refine your order block. So here we have exactly what we want. We have our bearish candle before this impulsive move. Remember, it has to be identified after an impulsive move. So here we have an impulsive move after the formation of this red candle. So we're going to be marking this out as our order block. So let's stretch that a little. So here we have our order block. So what next? As you can see, we had a break of structure after the formation of our order block. We will be marking that out as break of structure. So we had a break of structure. So BOS had a break of structure, and we have our H4 order block. We have our H4 order block. Then what next? What next? After a break of structure, you will wait for price to return to your order block. Just like I said, before price returns to your order block, you need to see liquidity. So here we have liquidity in form of equal lows. As you can see, we have our liquidity. Just like I explained on the sketch, many traders should think that this is actually a breakout and retest. They will start going along inside this area. As you can see, they are all taken out. So this is exactly what we call liquidity. So you need to wait for liquidity. So we have liquidity here in form of equal lows. We have liquidity in form of equal lows. So after our liquidity, you need to check where price is. You need to make sure the price is at a discount level. So you have to grab your Fibonacci tool, take it from these lows, from the OB to the last highs. As you can see, price is sitting right at our discount level, which is the 0.18 and 0.786. So it's in between. So this is where we need to be interested in. So 0.5 is actually your premium price. You shouldn't be looking at that. So anything above this 0.5 is actually premium. So we're interested in discount prices, which are the 0.618 and 0.786 of the Fibonacci levels. So what next? We need to go down to the lower time frames to confirm our entries, because price is now at our discount level. So we're going to be using lower time frames. Here we have our H4 order block. So we're going to be using 15 minutes time frame to confirm our entries. So that leads us to the last row on the book. So let's go down to the 15 minutes time frame. Just like I said, down on the 15-minute time frame, you need to as well mark out 15 minutes order block, break of structure, liquidity, and the tap into your 15 minutes order block. So let's do that right away. So let's go to our 15 minutes time frame. So here we are on our 15-minute time frame. This is our equal lows, this is our H4 order block. So this is our price. So we need to spot a 15 minutes order block as well. So here on the 15-minute time frame, you would agree with me that we had a nice order block inside this area. So this is our last down candle before an impulsive move. So this is our 15 minutes time frame order block. So here we have our order block. What next? You need to see a break of structure. Here we have a 15 minutes break of structure. We as well had a 15 minutes break of structure right here. We're going to be marking that out as our break of structure. We have our break of structure. Break of structure. Then you have our M15 order block. Here's our order block. So we had break and break of structure. So what next? What are we looking for? We need to wait for return to our order block. And before price does that, we need to see liquidity being grabbed. So here we have our liquidity in the form of equal lows. You would agree with me that we have liquidity right here. So this is our liquidity in form of equal lows. So we have our liquidity right here. Now what next? We need to wait for price to take out this liquidity and tap into our discount levels. So we grab our Fibonacci 2, take it from these lows to these highs. As you can see, price nicely came into our discount level. As you can see, 0.618 and 0.786. So this is our discount level. So this is where you will be taking your entries from. So you're going to be grabbing our 2. So we're going to be taking our entries from here. A stop loss just slightly below this 15 minutes time frame order block. Slightly below. So we're taking our entries right here. So, and on the L4 time frame, we're going to be targeting the next high for our take profits. We need to target the next highs for our take profits. So right here, we're going to be targeting this high for our next take profit. Why am I saying that? Because you likely have liquidity right here, so there might be a bearish order block here that price might jet from. So we want to be on the safe side. So we're targeting the next high for our take profits. So let's see how much risk to reward ratio we have on the trade. So here we are. So let's take our risk to reward ratio and know how much we would have got on this trade. So this is our take profit. So as you can see, this is a nice 1 to 8.5, almost 1 to 9. you're risking 14 pips, targeting how many pips? You're risking 14 pips and targeting 133 pips. That's a whole lot. So this is how you catch those sniper entries. Make sure to do your proper backtesting to understand this properly.